Okay, so there we're going to look at bank reconciliation. Bank reconciliation is something very simple, but you may get a little confused with what's going on if you don't know what you're actually canceling off. What are the steps to take place then? So before we look at that, let's look at the importance of bank reconciliation. Why do you need a bank reconciliation? Before I read the notes, let me tell you, imagine this. You're in an accounting office in a business organization and you're recording what's taking place in that business organization on a daily basis. You could only see what is around you, what documents, source documents comes to you. So you log in your check, you log in your deposits, you log in your payments, you log in your vouchers, you in that organization. However, when you're in a business organization, you may not have direct access to what's going on into the bank. Now there's online banking, so if there's proper control within an office, they can print the bank statement on a daily basis and update the cash book with what's going on there. But if there isn't proper control and you do not have access or the privy to that information, then what happens? Then you can only enter what is around you. You does not see everything that is going into the bank. So the money that you are declaring in your cash book that you have in the bank may not be the same value. That is the bank reconciliation. That is a reason why we need to reconcile bank. The bank, the value that you're telling your boss, hey, we have $5,000. When he goes to the bank saying 4,700. Why? A standing order came out for 300 and you didn't know because you didn't have access to see that. Or you saying 5,000, the bank saying 7,000. Why? Because you write a check for somebody, AZ, and that person didn't cash that check as yet, and therefore the bank cannot reflect it because the person didn't go into the bank to cash it. So hence the reason there will always have something that is happening between your cash book balance and your bank statement balance that will be a difference, that will make it there, that there will be a difference between both books. So your reconciliation is used to ensure that there is accuracy of your cash records, right? It helps confirm that the cash book reflects the true cash position. And why should the cash book reflect the true cash position? It's because it should have the daily activities that is coming in. The only thing that you may not see right away is if somebody do a direct transfer into your account. However, if you have proper control, once again, you're supposed to have that information. You should get that information in order to book it. It helps you to detect any errors and ensure that the business does not overdraw on its account or report incorrect cash on the financial statement. It helps you identify bank errors or omission. Now, most people might say, how a bank could have an error? Banks can have errors. It is just same as you and I. It is human have to enter the data into the system. Now I see you may find that, for instance, in Scotia, they will scan the number of value of checks, and it will identify the value, and it will deposit it in your account. It will scan a check, it will show the information of the check, and it will deposit the exact value into your account. So now they're an automated system, and it's getting more automated as we go along, whereas information is being scanned. However, on a day-to-day activity, you are still going to a teller, you're still going to a CSR, you still have to go in front of them to deal with certain things. When they're doing certain things like bank drafts or transfers, somebody human still have to enter the entry, and therefore they could have bank errors, data entry errors, right? The time difference is one of the main differences that you will encounter, whereas I was explaining, I could give, let me say, Zari a check at the end of the month, on the last day of the month. And Zari, we recorded that we give Zari a check for $1,000. And in our books is a credit entry in our bank, so it reducing our bank value. But Zari didn't have time and Zari didn't go in the bank to cash at the same time. Or Zari may have deposited, but it's not the same banking that she deals with. So the bank taking 4 working days to clear that check. So there's a time difference. By the time you give her the check and the time you do your reconciliation, the check did not clear. So your cash book is showing a difference compared to your bank statement. And there is a variance once again. Time and differences is one of the main difference why you need to do your reconciliation. It captures your item missing from your cash book. Now, this is an important part because this is a step in your cash book reconciliation that once that have these items, you actually go to your cash book and you input it into your cash book and you get a new revised balance for your cash book before you start your bank reconciliation. So when there are bank charges that you don't have in your cash book, or bank interest, or some standing order, or any transfers or whatnot, and there is something in your bank statement that you need to enter into your cash book, you will have to update your cash book first and get a new balance for your cash book and then do a bank reconciliation. So this part where they capturing the missing items from your bank statement into your cash book is very important. It strengthens the internal controls. It supports reliable financial reporting and requires a good business practice, right? So those are the others. But the main thing is for exam, timing differences, errors, and it captures missing information. So once you have that at hand, you should be able to gain some marks. Now let's look at a typical book example before we look at a question on whole. And the reason why I'm giving you a book example is because you all may have it in your text and you could go back to revise. And also this is like a full cash bank reconciliation to somewhat. The exam might bring it in small pieces and you, as you will see later on, and it wouldn't have this whole thing for you all to understand what's really going on. So I'll draw your attention to the picture that I have here, right? So looking at this, you see cash book here and you see bank statement. One thing you have to remember, the cash book is your internal information. This is coming from your organization. This is what you did as the accounts clerk. Sitting by the desk, you entered all these items. Your bank statement is what came from your bank. Let us say Republic Bank, RBL. So that came from Republic Bank. You don't know the information there until you see the bank statement. What you know is what is in your cash book because you recorded that. You don't know what is in here. So when you have the two statements, in order to reconcile it, you first have to start to compare it. Now, a debit entry in your bank statement, right, when you debit and you increase in your account, if this bank statement come in this format here with debits and credit, but most likely it most likely comes like this format, but just in case, a debit entry here will really be a credit in your bank statement. And the opposite for this, a credit entry here will be a debit entry in your bank statement. Just in case it comes in that way, you will remember that is the format it does because the bank is saying, hey, we owing them this and they take all this. So that is how this is opposite to our entries in our books is different organization. Okay, so moving on. The first step is to compare. So you're comparing the two bank statements. By now, you're all supposed to know what is OD. OD means overdraft. OD means the business owners them withdraw more money than they have in their bank account. And now it comes like they owe in the bank these funds. Yes, you can operate on an overdraft because the business is such a good business that the bank allows you a maximum amount of what you can use if you do not have actual cash for a certain period of time. You pay interest on it though. So OD means overdraft, means the business is owing. And a credit, therefore, in your bank statement, it'll be represented by a credit entry. It cannot be a debit because debit means you have an asset and it means they say the bank is owing you. But in this case, it comes like a small loan and it's a credit entry you are owing the bank. So when you see overdraft or you see a credit balance, you have to remember this not just for bank reconciliation, but for anything that deals with your cash book or your questions in multiple choice, they will ask, what does this amount represent? What does it tells you to have a credit balance, right? It means the business is owing the bank that amount of money. It means to say it withdraws more money than it had in the bank account, whichever way you want to express yourself. So comparing the OD balance and your credit balance, which showing that you owe in the bank is the same thing. So it starts with the correct balance brought forward. So the deposit section here would be a debit entry in our books. So we can go through all the deposit first. So we had the 308, you tick. And if you have a question like this, please do it like this in your exam. I didn't see any coming fully like this in the exam yet. They bring small questions as I will show you just now. But if it comes like this, please do this first. You tick off what? So 120, 120, 124, 124. So we have 106 not being represented in your bank statement. This is your balance carry down, so carry forward, right? So you have to ignore that for now. Then you go on the opposite side with your withdrawals and your credits, and you tick once again 140, 140. If you're doing this in a company, you do it the same way if you're doing a reconciliation. But unless you're ticking in P3 and you're ticking in a accounting program and you're ticking in your bank statement as you go along. 77, 77. And in this case, the bank charges in the bank statement is already recorded here. If the bank charges was recorded here, but not here, you would have to go and put it into your cash book. So this, you would have to take it and go and enter it here and update your balance carry down. But it is already there. So this is the one I was explaining. If for some reason there are charges or interest or whatnot that is in your bank statement but not in your cash book, you need to update the cash book. So the individual who did this, they already updated their cash book with the bank charges. So it's there already. So all we have to do is tick it. So we tick it. So what is missing? This 63 is missing. So two items are missing in this from this cash book. The bank did not have 106 and the bank did not have the 63. How do we reconcile this? It's a simple format. And if you pay attention to my little writing on the side here, it is two different things I have here, right? So let's look at the cash book. Look at this on this end here first. So let's look at one end, right? If you're starting with your balance as per your cash book, there are two ways to do reconciliation. The examiners will ask you which way to start. They will tell you, as I should say, not even ask. They will indicate, they will state, reconcile starting with your cash book balance. Reconcile starting with your bank statement balance. So they will tell you how to start, what they want you to start with. According to what they say, this is how you're going to have to approach it. Now, if you're starting with your cash book balance, your bank lodgement will have to be minus. What is your bank lodgement? Your bank lodgement is this. This check that you deposited and it's not showing into your bank account as yet. Means to say what is if you notice the date. Timing differences, December 31st. So you received the check on December 31st. You entered it in your cash book on December 31st. But possibility exists that you didn't put it in your bank statement yet. You didn't go into the bank and do the deposit. You record it, but you didn't deposit it. So your cash book is showing the deposit, but your bank statement is not recognizing it. Right? And that is a typical example of timing differences at the end of the period of time. Right? So it's a bank lodgement, meaning say you have it there, but it's not in the bank statement. So what do you have to do now to get back to your bank statement balance? You have to now minus it back from here because a deposit increases your cash book, right? So when you minus it from your cash book, you actually reducing your balance from your cash book to cut to a better reflect of your bank statement balance. Unpresented checks. Unpresented check is check that you actually give out, but the person didn't deposit it in their account, which is in this case J. Kelly. J. Kelly received a check on December 27 for $63, and for some reason J. Kelly decided they're not ready to deposit the check, or for some reason it didn't clear yet. So what you have to do, add it back because here you would have minus. A credit means you minus it from your cash book. So you now have to add it back into your cash balance to get your bank statement balance. So if we use this as an example, we can now say balance as per cash book is negative 380. So the balance here is negative, right? This is a credit balance, so it will be minus. So you put in your minus 380. What you're going to do with your bank lodgement, you're going to minus your bank lodgement. So on December 31st, 106, you have to minus that. And the unpresented check is $63. You add back your unpresented check. What did you come up with? A negative 423. If we look at our bank statement at the end of the period, what is the balance here? The balance is 423. So when you start with the balance that you have in your bank statement and you minus what they didn't have as deposit and you add back what they didn't have as your reducing your account as your payments, it actually returns to the balance that the bank have, which was 423. Now, as I said, in the exam, they can ask for you to start with your bank statement balance, which means to say you have to start with the 423. So if you're looking at this carefully, 423 OD is a minus. So you do not forget that when you're using this into your reconciliation, OD means it is you are owing the bank. So you starting with the 423 minus the what you did for your cash book will be the opposite. Here you minus the bank lodgement. You'll know how to add the bank lodgement because the bank statement is missing a deposit. So you need to add it back into your balance, into your bank statement balance. And you will have to minus instead of add. You'll have to minus the checks that is not presented. Because why? Because the bank is missing the check that you make a payment for that's supposed to reduce your balance. So when you add the check that is missing for the deposit and minus the payment, you will now return to the balance that is in your cash book, showing the negative 380, which is a credit balance in your cash book. So this little format here is all you have to remember in your reconciliation. What you pay in mind of is because the examiner likes to bring things very tricky. Pay in mind that bank lodgement is increasing your bank statement value. So anything that is increasing your bank statement value, you have to add it. And anything that is decreasing your bank statement value, you minus it. Right? If you remember that, if the examiner comes in any tricky way of format, you will remember that you add what is increasing, you minus what is decreasing the bank statement value. Now, from your cash book perspective, if it's in your cash book, then when you want to work backwards to get your bank statement balance, you will have to reduce now what you was increasing your account, you minus it, and you add back what you took out already to come back to your bank statement. So I hope that makes sense. I hope it's easier for you all to remember because if you start with your bank statement balance, is the opposite to what if you start into your cash book balance. That little snapshot there is very important for you all to remember. Right? Now, June 2022, I think it is a past paper question with a long question. It's very tedious that you all could sit down and battle with it. If you want a good question that will challenge you, go to that question and make a full attempt after we do the smaller questions. So in June 2024, however, before we do the bank reconciliation, they give you a question, and the first part of the question, for question 1, was to do a 3-column cash book. Now, I hope I'm not racing. I hope that you all are getting time to register this, that you all are taking any kind of notes quickly because I do put up the videos after on YouTube for that, just for your purpose for reviewing. However, you all need to go back and practice over these things after these lessons, right? And these are sharpening your skills. So the first question, look how this question came. The first part of the question came where you had to do the actual cash book. So they want to see if you know how to do a cash book. For those of you all who don't have classes with on a normal basis, on the debit side, this is not double entry once again. The only thing that is double entry in a 3-column cash book is contra entries, where you have to do the bank and the cash at the same time. Everything else is single entry. So the first thing you ask yourself Is it affecting my cash or is it affecting my bank? Yes, my bank. Yes, my cash. No or yes. Whichever one, right? You need to find that in the transaction. Once you know it's your bank, you're going under your bank column. You're not going under your cash. This is how you have to mentally store this because in exam you're rushing, you go and put it into your cash section instead of your bank section. Or you put it in your bank instead of cash. The second question you ask yourself, is it increasing my account, my bank account, or my cash account, whichever one it was, or is it decreasing? If it is increasing, you have to do on a debit. Decreasing on your credit. And that's it. In a few minutes, I can show you how to get a whole cash book in that few minutes. It's 1:30. Let's look at the question quickly before we go on to the bank reconciliation. Using the form, so they give you this form already. Provide on page 5. Prepare the 3-column cash book. Balance the cash book at the month end and bring down the balances at the next period and total the discount along columns, right? On November 1st, 2023, John Enterprise had cash in hand for 145 and the business had an overdraft, which means they're owing money, so they're going on the credit side. So on November 1st, you put your balance board down, 145 on the cash column. And November 1st, you put your balance board down, 125 on your bank. Do not mix up your beginning balances, let's screw up your whole question, right? So you put your beginning balances. Read the question. Sales by check totaling 2635. Is it bank or cash? Check is bank. So therefore, I go in under my bank column. Is it increasing or decreasing? Increasing, so it's on the debit side. So sales, debit side, 2635. Pay the following accounts, let's say 5% discount by check. Say paying L Smith. One minute you're paying, right? So already that's telling you reducing. What you're paying by check, so that bank. So reducing bank on the credit side. L Smith 840 and K Peters 920. If you know maths, 5%, 5% discount is either you calculate 95% to get the full figure that is being paid, or you calculate discount and your minus. It's up to you how you do your minus, right? So it's 840 multiplied by 0.05. $42 is your discount. You minus 840 from that, you get the amount that you're paying check. Same thing with the other one, 920 multiplied by 5%, $46 a discount. 920 minus the 46 is the amount you pay by check. Make sure you put it on the bank, right? B. French paid $1,900 in cash in full settlement of his account for $2,000. So he paid it to who? John. So is it bank or cash? Cash. So we're going in our cash column. Is it increasing or decreasing? John receiving from B French, so it is increasing. So therefore it will go on the debit side. And debit side under cash, 1,900 received, but he settled an account for 2,000. So therefore you get $100 off in discount. That's it. So you put it on the discount column. Card sales paid directly into your bank account. So we're going directly in your bank. Okay, so bank you're going under, and it's you're receiving money, so it's increasing. So in a debit side. So under bank, 1,001. Mr. John, the owner, give the business 3,000 by check. So Mr. John invested into the business, but he gave them a check, which is bank. So therefore, the bank will be increasing. And it must be repaid in 1 year. So we can't put it as capital because it's like a loan. So you get a loan for $3,000. Debit. The money increasing in your bank account. The owner took $800, so they didn't tell you John, but John went and take $800 of the cash and in hand to deposit it into the business bank account. So he take $800 from the cash in hand to deposit into the bank account. So what happening here? So two things happening. You have your cash, and now you have your bank. So once again, not to be confused, which one is increasing? You put in money into the bank, so the bank will be increasing. So you know under your bank column, you have to put 800. But where did he take the money from? Cash. So in details, you put cash. Don't forget C for contra, right? And your cash now is decreasing. So under cash, you have to put the 800 that is reducing. And where did he take the cash and put it in? To your bank account. So in the details, you put bank. Some students get confused with that. So once you know what you put in the information under, in the details have the different account represented in it. So it's under cash, so in details bank. It's under bank, so in details cash, right? And you know which one is increasing, you know which one is decreasing, so you have your contra entry. Rent paid in cash total 1540, so that is cash, so your cash decreasing. So it's on your credit side, and it's rent by 1540. That's it. All you have to do is balance your account. And I tell students when you're balancing your account, let me just do it quickly here so that you all will see. In a cash book, always balance one column, one account at a time, because a 3-column cash book have 3 accounts. You don't balance a discount allowed and discount received. All you do is put a total. So discount is 100 allowed and discount received is 88. So you just put the total. You don't balance that. You just total it. I think the examiner said that totally discount columns. You see it down here, totally discount columns. You balance your cash columns and you balance your bank columns. Balance it one at a time. Don't rush the question. Add your total, write it to the top. So when you write this is 3375. Now don't forget to erase it after, right? So 3375 when you total this. When you total on this side, you have 2340. Not to have an error, the first thing I tell students to do, where the column that have the least amount, put balance carried on one time on that side. Because you know you're missing the difference to make up the bigger value from there. So this side is 2340, here is 3375. So to make both sides equal, on the credit side must have the difference. So we have 3375 minus the 2340. This will be the balance carried on, $1,035. So now once you have that and you total your columns, the 2 cash columns, both columns, both equal sign have to be in the same row. Don't put one here and one up here, in the same row coming across regardless, right? And both sides are correct, you erase your pencil marking. Then you do your bank. You totally bank this side coming up to 7560. You will find it in your calculator. And you total the next side of your bank, which is 2797. Which side have the least amount? The credit side. So once again, it already have a balance carried on, written in detail, so you know you come in here to write the difference. You minus 7560 minus the 2797, you get 4763. Right? You take it off. Take off your markings. Both sides should be equal. Right, so both sides is 7560, 7560, and what you carry down on the credit will be brought down on the debit. 1035 and 4763. And that's it for your cash book. Now, the reason why I went through the 3-column cash book is because I've given you all a little shortcuts on the petty cash today as well. So, the 3-column cash book was requested, but the very next part of the question, watch what this examiner did. I said, this examiner is something else. Look what he did. The examiner went and asked you to do a bank reconciliation. So now these poor students in the exam room will automatically think they're doing John enterprise account. And they're supposed to balance back to get this bank balance 4763. Because you're working to your 3-column cash book. But that would be a big disappointment. Because in this question, the bank reconciliation ended up being a totally separate question from the 3-column. Although it was part 1A and part 1B, the question really was separate. So if you look at the way we did the reconciliation before, let's look at it once more. I'm taking this over with me. Let's see how it works in the exam, right? Right. Prepare the bank reconciliation statement for John Enterprise for the month ended the 31st of December 2023 to arrive at the cash book balance, right? So it's December 31st, 2023. But what you realize here with your bank statement balance, in this cash book that you did, it was the 1st of December. So student automatically thinking without even registering how the way our brain work that this balance was the first, it's not the 31st, so therefore I'm not supposed to balance back with that. There's no way the examiner expect me to balance back with that when this was the 1st of December. So it's a totally separate question on the whole. And student would have wasted time trying to get the same balance. That examiner did good. So nevertheless, it's the 31st of December, you're doing your reconciliation, so please do your heading. I just have a short format here, so you put John Enterprise, bank reconciliation. What they say for the month ended 31st of December, the same information you put in, right in these 3 columns here, rows here. Make sure you put your heading, right? Don't forget your headings, it's important in the exam. But I'm leaving these 2 here so that you will see which one you're going to work with. The following information is available. Balance as per bank statement was 9,275. Did they say was a credit balance? No. So if they didn't say was a credit balance or they didn't say was an overdraft, but they just give you a bank balance, it means to say it's a positive balance that you have. So the beginning, the balance that they give you to work with is your bank balance. So let's look at that. So you're working with So you're working with your bank statement balance of 975. You're doing your bank reconciliation statement to arrive at your cash book balance. So you want to arrive at your cash book balance. Which one of these 2 reconciliation we're going to start with? You have a bank statement amount and they want you to arrive at your cash book balance. So hence the reason you'll be using the opposite from your cash book to your bank statement reconciliation. So if you start with your bank statement balance of 92.75, so you start with 92.75, check number 1034 thousand 1,223 and check number 107 for 830 were not shown on the 31st of December bank statement. Don't look here for it. It's not in this question. This question was December the 1st balance. This is December 31st you're dealing with. So it's 2 different reconciliation. So this means to say you issued check in your bank statement and in your office, in your organization, in your 3-column cash book, but it's not represented in your bank statement from your bank. So now you have to actually do something with this. You're working back to get your cash book balance. So what do you do with that? It is called unpresented checks. Checks that was issued but not presented to the bank as yet. So you have to minus that value. So what is the total? You can either put it, check number and the amount one by one, or you could put in brackets and you can show the addition for it. Okay, this is highlighted so it wouldn't pop up. So you can add it or you can put it in brackets. So it's 830 plus 1223. So the amount you have to minus is 2053, right? So far we good, right? Then a deposit of 2270 made on the 31st December. The deposit was made on the last day of the month. So therefore it was not reflected in the bank statement. So it's a bank lodgement. So what you have to do with that, you have to add it back. Simple as that, 2270. Very huge. And when you sum this up, your balance as per banks, as per cash book will be 94.92. So this will be a closing balance. I don't like how it looks. Right? So it's as simple as that. Now you could have listed the items, you could have done what you want to do, but just remember, if you're working from your bank statement to your cash book, it will be the opposite from working from your cash book to your bank statement. So what you'll be asking yourself when you're doing your bank statement, from your bank statement to your cash book, is it increasing? Would it increase the value? Yes. So you need to add it. Would it decrease the value? Yes. So you need to minus it to get back to your true value from your cash book. And that was worth 5 marks. So from 1:30 to 1:44, which was 15 minutes, we was able to cover 15 marks on your cash book and 5 marks on your bank reconciliation. Just by simple things, knowing if your cash book, if it's increasing or if it's decreasing, debit or credit side. Your bank reconciliation, if you're starting with your bank balance, if it's increasing it, you debit, add. If it's decreasing it, you minus. So if you remember that, is the opposite for your cash book. And that's it for this question. This was June 2024, question 1, 20 marks. So I hope that you all would not struggle with bank reconciliation after this. So the next question I had for you all, I did it already, but I just put it up in an effort to save some time so that I can look at the petty cash question, is 2021. 2021 seems to have a variety of questions. All the revision we did so far had a 2021 past paper question in it. If not January, a June question. Because it had some nice questions. Now, before I forget, I want to do 3 past paper questions with you all. I want to have 1 session a day, whereas you all will already go home, print your paper, you will do your questions at home, you will have the solutions ready, and we'll have a session where I will now go online and correct it with you all so that you all will go, as I am correcting, you will correct your paper and you will understand where you went wrong and why, so you could identify a mistake. Those 3 papers will be June 21, June 22, and June 2023. It's a good blend of paper. It have manufacturing, it have partnerships, it have all the adjusting entries, it have the, how you call it, oh my gosh. Yes, it have a whole variety of questions on those 3 papers. It covers a wide variety of your syllabus, payroll, everything. So we will do June 21, 22, and 23. So you attempt that, we will correct it together, and let's see if you could learn from your mistake from that and get you more ready for the exam. Okay, so moving on. So how much was this? This was 6 marks. So this question was 6 marks. Another bank reconciliation, similar to the one before. Now, they did start with a bank balance, but this time it's an overdraft, right? So let's look at it. Beginning with a bank statement overdraft. So they actually tells you. It tells you beginning with the bank statement overdraft. You seen this here? The examiner want to give you marks, they're giving it away. Prepare your bank reconciliation statement for Enslite Wholesale at 31st of May 2021 using the form provided. So they give you the form for you to write in it. This blank space here is for what? Your heading. Don't leave it blank, please. You will get your marks. Who it is you're doing? Enslite Wholesale bank reconciliation as of the 31st of May 2021. Right? So you make sure and put in that information. So Enslite Wholesale bank statement showed an overdraft of 1118 on the 31st of May 2021. So you have a bank balance overdraft. You have to put it in minus, right? So you have a minus you're starting with. On that same date, the cash book balance was overdrawn. So you have an overdrawn balance in your cash book. Now, this is not your cash balance, in your cash book. So they're giving you a bank statement balance for 678. So you have an overdrawn balance, which is a minus again, in your cash book for 678. The following discrepancies between the 2 records were discovered. Hence the reason why they tell you to start with your bank statement balance. A check sent to supplier A. Jamil did not appear on the bank statement. So what do you call this? That you issued a check to someone and they didn't cash it? It's called unpresented check. So you have an unpresented check of 700. The bank statement showed a debit of Heavens Prosperi personal private home insurance. So there is something for home insurance in the bank statement. So that is something personal, insurance, personal item. The bank had not recorded cash sales deposited on the 31st of May 2021. So you have a sales that didn't deposit. in cash that was not deposited on the 31st. But apparently, they will say um, cash sales direct into your bank account. Well, it's supposed to go direct into your bank account. So, what do? You starting with your bank balance, your overdraft balance of a negative figure of 1118. What do you do with unpresented check? You less that because why? It reducing your bank balance. It was not presented in your bank as yet. However, it needs to be reduced from your bank balance. So therefore, you have to minus it from your bank. The insurance might have been the only tricky thing here. The bank statement showed a debit for Heaven's Prosperity, whoever personal private home insurance. So there is a personal private home insurance for something, for somebody, right? Personal stuff that another company that other than a slight wholesaler and for 240. So it reduces your balance in your bank statement, but this is not for a slight wholesale. So this will have to be reversed and this will have to increase back the value. So hence the reason you will have to add it back into your bank balance. This has to be reversed from a negative figure from reducing your bank account. I hope you all understand that. It's Heavens, I can't even pronounce this, Prosperi or something like that. Prosperes. Okay, personal private home insurance for in a slight wholesale account. Bank errors. So that need to be added back. And then your cash sales that was directly deposited in your bank account was not recorded. So you need to increase back your bank balance by 900. When you do the adjustment, your bank balance remain 678 for as in your cash book balance, which you started off on the same date, a cash book balance of 678 overdrawn. And that's it. Once you follow the rule, you will be able to get your reconciliation down to the key. And we in time to look at the last thing. Now, I know I'm running through. I'm not asking you all anything if you all understand or anything as such. It's because this is just to guide you all as to what the formats are, what to look for. And I think you all should be taking the little notes as to the tips as to how to solve these questions, how to resolve, how to get a quick solution. So the petty cash. Now, petty cash is straightforward. Very, very straightforward. I tell students on this section of your petty cash book is like having a diary. All you have to do is take the information from there and plug it in there. The first part of your petty cash book where you have receive, date, details, and total is like having a diary where you just plug in information. Write up Avril Bernie's petty cash book for the month of June 20, using the form provided. So they give you this form. This is the form they give you. Ruled up already. Receive date, details, total. And then the analysis column. You see the analysis column is separate. Balance and rule the petty cash book and restore the fund at the end of the month. So you have June the 1st, you start with a float at 200. Balance brought down 200. Everything else here was just being recorded. June the 3rd to the 29th, these are the expenses. So June the 3rd, traveling 50. June the 9th, stationery 35. June the 20th, cleaning products 20. June the 29th, refreshment and the $40. That's it. Like listing a diary. You're listing items. Making a grocery list too, no? It's not double entry. If you notice, the petty cash book is not you either having to think about what is the debit and what is the credit. The most difficult things comes in is when you have to balance your book and to know how to balance the end. However, if you look at this, I will show you it. When you total all of your expenses, this means to say this is the money you spend. You spend $145. So if you had $200 in your hand as petty cash and you spend $145, how much is the difference? How much are you going to have remaining? 145 minus from the 200, you will have $55 remaining. That will be your balance you're carrying down or carrying forward. When you add it back, you get 200, which balance with this side of your column, 200. So you have 200 here and you have 200 there. However, you will now have to bring down that balance at the beginning of the next month, which is July 1st. You will start off with that $55. You can't pocket it. You can't hide it from the business owner. You have $55 remaining, so you have to start off with that. What are you going to refloat? Restore the petty cash fund at the end of the month. What are you going to refloat? You just have to refloat what you spend. You don't even have to think. You don't have to recalculate. You're going to refloat what you spend, which is the total expenses. So the cash book, but in your cash book, you might take cash or you might cash out a check for the 200 or 145 in this case, and you will put it into your petty cash float. So on July 1st, you now restore your petty cash, 145. So on the receive section, I'm not saying debit because no debit and credit. On the receive section, you will have back your 200. So your float will always remain 200. At the beginning of every month, they want to see 200 in your petty cash. Here on this side is your analysis column. This is when you now decide if you have a bigger petty cash to do. How much is going on the traveling? So if you have gas, you have traveling, you have anything relating to gas and traveling, tickets or whatever for traveling, you put it under traveling. Anything for stationery for the office will go under that stationery column. In this case, you just have one traveling, one stationery, one cleaning, and one refreshment. So you just put them under the respective column. However, in bigger petty cash, you will have more for traveling. So if traveling come down here, you put all the travelings, all the stationaries under the respective columns, and then you total it. The reason being is because all of these are expenses that's supposed to have a general ledger account to be posted to your income statement later on. That is where your double entry comes in. So in your traveling account, you will now have to, what expenses as well, normally a debit entry. So when you move it from here, you go to your debit side, right? And you put travel, well, balance from petty cash. On what date? $50. So you have your traveling account. And the same thing with your stationery, cleaning, and refreshment. And that's it. At the end of the day, you write off the income statement, $50, and this account is closed at the end of the month. And that's it. So in the exam, they might ask you to transfer from your petty cash book to the general ledgers. Is this what they're talking about? All these are general ledgers account, which are expenses. And that's it. So in closing today, we look at the bank reconciliation, we look at cash book, and we look at your petty cash book. We look at, most importantly, the reasons, the importance of having a bank reconciliation, right? How to approach it. If one comes like this, you tick off everything first. If you're starting with a cash book balance, you minus the deposit and you add your own presented check. If you start with your bank statement, it's the opposite. And you should get back the same balances. As you see, 380 was the cash book here, 423 was the bank. You start with 423 from the bank, we end up with 380 from the cash. You will end up with the balances regardless of what. Ask yourself the first question, is it bank or is it cash? Cash or bank? Is your account increasing or your account decreasing? And you'll know which side to go into your three-column cash book. That's it for cash book. And we look at a question, and we look at another one, and we look at the petty cash. Here it's just like a journal. Total expenses is the amount you'll be refloating. Balance carried on will be the difference in cash you have in hand. Make sure always your total columns for these things are on the same row. And that's it. So we can close today. Any question?